And I've got the whole hour.
Hey everybody, welcome back to another candid conversation with your CPA. I have with us our guest Sam Milton, the founder of Climate Resource Group. Kind of does some interesting things in the cannabis industry on the energy side, and kick it over to you, Sam, to introduce yourself and Climate Resource Group.
Thanks, man. I appreciate it. Yeah, thanks for the invitation to join you on this podcast today. It's an honor to be included in your roster of guests. So yeah, my name is Sam Milton. I founded a company called Climate Resources Group about 7 or 8 years ago. And I was working in the energy policy world, climate change policy, and doing some work with utilities at the time. And utilities for a long time have had programs where they have a small budget to offer incentives to companies and residents to install energy efficient stuff. So mostly kind of like light bulbs you might screw into your ceiling at a hardware store. But they also have commercial and industrial scale stuff, so massive $1 million projects that they support. But I would see these meetings and I'd always hear the utilities complain they couldn't give this money away, and it made no sense to me. Why, if you're a business and you had a high energy cost, why you wouldn't take advantage of these programs that utilities offer. So I was like, hey, I'm out of here. I'm gonna stop doing my policy gig, and I'm actually going to work on behalf of companies to help them understand how these programs work and how to get money from these utilities. And that was kind of the genesis of Climate Resources Group. So here I am, 8 years later, doing this. And the dream is alive.
I like it. I like it, and definitely because it is interesting, like energy tax credits, resource credits, grants, and all that stuff. Like I know in my prior life, ESG, environmental social governance, was becoming very, very common, and so that was
Mm-hmm.
a big aspect of it. Of like, because we would quantify it, and it's like, well, all right, well, how much energy efficiency credits did we get this year? We
Yeah.
got more, great. Our score went up. If we didn't, that was a bad thing. So we would definitely allocate budget to try to go after these things, and
Mm-hmm.
so very interesting that now you're kind of applying that to the cannabis industry. And so tell us a
Yeah.
little bit about zero cost capital. I think capital is one of the biggest pain points in the cannabis industry. I'll probably kind of title this with capital in the title just because I know people will be
Yeah.
interested. And so zero cost capital was an interesting topic. So tell me a little bit about that and how it relates to what you do with Climate Resource Group.
Yeah, absolutely. Yeah. So we met at a Cannabis Capital show a few weeks ago, and this light bulb went off in my head. I was like, people are kind of looking for money to fund their operations, right? Fund their growth, either whether it's a startup or an expansion, or they want to purchase another facility or an asset, and looking for ways to do that. So they're going around as you do. You're talking to financiers and trying to talk to investors. And there's always a cost when you borrow money from somebody, right? I mean, it can be either equity, finance. It can be debt finance. And also, there's a cost to that. And it occurred to me what I've been doing since I've started Climate Resources Group is offering or finding ways for people to get free money from these utility programs. So literally zero cost capital. Again, it occurred to me there's like a really interesting distinction there between the capital that is really hard to get and expensive relative to what you might get for a home loan, and the stuff that utilities literally give away. And it's not to say that there's no strings attached. Of course there are. You have to to hold up your end of the bargain. But at the end of the day, it is, use utilities can write a check to a business, for having installed equipment that they think will save, the customer and the utility energy.
No, that makes sense. And I guess like some of my mind goes like, all right, well, how large are some of these checks from these utility companies? Because like it's capital, like it's not just an expense of the business. We normally need hundreds of thousands of dollars, millions to
Yeah.
treat it like like an actual like capital injection and or
Hmm.
access to it. And so just tell me a little bit about kind of the size of this. And obviously it is dictated by the size of the company. Bigger the company, the bigger their utility usage, the bigger their utility bill, thus the bigger their kickback. So can you tell us just a little bit
Hmm.
about kind of like a case study, either inside cannabis, kind of how this worked out and played out?
Yeah, absolutely. No, I mean, these programs, they seem almost too good to be true. But
Yeah.
they are absolutely true. Not everybody can get it. But if the circumstances are nice, that the middle, the juicy spot in the Venn diagram, hits, and people can get, again, depends on the size of the project, right? But people can get easily six-figure checks from the utilities for upgrading or installing the energy efficient equipment, such as lighting, of course, is a big thing. And LED grow lights, are relatively more energy efficient than the old high pressure sodium fixtures. And utilities love those because they're easy to quantify in terms of the savings, and they're readily available, and they can fairly easily model now what the savings will be to the customer and to the utility in terms of energy usage through them. So almost every utility that has a program will incentivize the installation of LED grow lights, for example. And I've done a bunch of these. Frankly, LED grow light projects are kind of majority of what we do. We also work with HVAC and humidification projects as well. But yeah, we just wrapped up. In fact, the check got cut from the utility to the customer. Literally, the customer just got it yesterday for $250,000 for an Oregon grow project, which is, again, that's not an outlier. That's a very kind of standard size project that I work on.
And then a question on that kind of
Yeah.
leading off that. So, all right. So is it one lump sum payment? Do they pay quarterly? Like, how do they break up the payment? And what is the
Yeah.
timeline of starting this, the project to get this credit until actually getting the check? Because I know
Yeah.
there's like an outlier of time and energy for it, but like, what is a realistic timeline? And do they pay in one lump sum? Like, is it broken out? How does that work?
Yeah. Well, you'll get tired of me saying this, but it depends. You've got hundreds of utilities across the country, in 50 states, and they all kind of treat this a little bit differently. So for the most part, like most of the standard project will be a customer approaches the utility kind of with a project concept or project proposal, saying, "Oh yeah, we want to install 500 lights in our grow facility. We're either considering, if it's a new facility, you're considering an equal number of high pressure sodium fixtures or whatever, how many fixtures it takes to meet that same level of light output." So that becomes the base case. Or if they're replacing fixtures, you're like, "Hey, this is what we're working with. We want to install these new lights." And then, based on that project as it's, conceived by or perceived by the utility, how much money it saves. And actually where I come in is to, make sure the utility can see the biggest range of savings there. Because a lot of times people might, submit a project proposal to the utility, but the numbers aren't really, presented in a way that the utility, gives that, the full amount of the value of the savings there. So we know how that works, and this is kind of what we do. We facilitate those transactions between the customer and the utility, just to make sure that the numbers are in the favor of the customer, not the utility. It also takes a bit of time to do this. So we can get back to that too in terms of how that all works. But usually they get paid after they've installed the project. So there is a bit of of time during which the customer has to sit on the cash that they've put up for that purchase. And there are some financing schemes that will allow the customer to not pay that upfront. That's where there's more. That's where it gets to become like a higher cost for that capital, because you are going to be borrowing for that upfront piece. But if you're not going to need to borrow for that, it literally is zero cost, and the utility will pay after they've seen that you've installed the fixtures.
And does it matter if the company is like a first time build out where they install the fixtures, or they're refabbing a current operating company with
Yeah.
does that impact it?
Yeah, again, it depends, right? But
Yeah.
I mean, if it's usually the utility will always pay if it's a retrofit, meaning if there's like an old janky facility that has dirty old lights. Yeah, the utility loves to see somebody take those out and put in something that's better. And the base case is very clear in that instance. For a new build out, which the utility calls new construction, In those cases, then it's up to somebody, I prefer it to be me and my clients, but we need to say, all right, what is the counterfactual, what's the baseline, that we would be working with in this facility. And so, you want to make it as cheap and dirty as possible in terms of, energy consumption. So, have it, cheap and use a lot of power.
Mm-hmm.
And then, and that's kind of how you can stretch
And
out,
then you do
the
that
savings.
calculation then where it's like, hey, utility company, this is the current plan. It's going to cost this much money. But if we use this, energy efficient way, it's going to cost this much. Here's
Mm-hmm.
where the profit lies. Then that's kind of the calculation is what you help the cannabis business owners with, or, probably do yourself on their behalf.
Yeah, yeah, exactly. That's right.
That
Exactly
makes
right.
sense. That's because
Yeah.
I
So yeah,
understand
it's
conceptually what you do, but I'm like, I've never really thought, I've never done
it's
this before, so I wouldn't know if I call the energy company first or call the business first. So
hmm
that's kind of where your skill set lies. I like
yeah,
that.
yeah,
And
yeah,
then,
absolutely.
so on that point, what would you say is like an ideal cannabis business to take advantage of these energy credits in either
hmm
size of dollar amount, employees, canopy square footage? Like, do you have a sweet spot or like a minimum of like, all right, companies, you want to be either building out a facility of this size or post build out and of this size?
hmm
So who's the
hmm
ideal cannabis company to take advantage of this stuff?
Yeah, I mean, frankly, anybody that is kind of, that has an energy efficient project that they want to submit, and so what that means is, if you want to take advantage of these programs, you obviously want to be in a utility territory that offers a program.
Yes,
Most
where you're
of the
located.
large, kind of industrial owned utilities, so those utilities that are traded, on the stock market, the big ones in your state, they often have some sort of program, because they're the ones that are regulated by usually the Public Utilities Commission, and usually it's the PUC or a similar body that kind of mandate what the utility needs to be doing with respect to these programs. So these programs, the utilities don't just do it for fun.
Yeah,
They
yeah,
have
they
their own
want to make money
motivation.
too.
Yeah, and this is kind of one of the misconceptions of these programs is like, why, or why would a utility want to, pay me to buy less of their product?
Yeah,
It's a natural question, that doesn't really have a super obvious answer. But yeah, the utilities are either mandated by the kind of the utilities commission to do this, for whatever reason, either for grid reliability, because they need to just kind of reduce the amount of, electrons going through the wires, because that, does kind of, create some wear and tear, on the infrastructure. And some states also have like a carbon reductions, target, so, they rely on the utilities to help them reduce the overall carbon footprint, of their customers and of their
but
operations.
that is, no, I like that. And because it's like the bigger picture stuff. It's like if you
Yeah.
just looked at this tiny little situation, it wouldn't really make sense. But when you realize there's a whole US government tax strategy at play and
hmm
ESG affects, because it affects our stock price. And so I'm like, oh wow, like ESG
Yeah.
is very serious. And you would just see the billions and hundreds of millions of dollars being thrown around to like address the issue or
hmm
address the issue in the business so that wouldn't hurt us at all.
hmm
So
hmm
it is a much bigger thing at play. And so to your point, like not an obvious answer, but when you know all these other things at play, you're like, oh, okay, that's why we're able to do this, which I get
Yeah.
to some extent, like selling something
Exactly.
that's not easily understood, but kind of makes sense once you understand the bigger thing. A question I
Yeah.
had about the programs, just because it's the cannabis industry, it's still federally illegal. So we get a lot of pushback on, for sure on the tax side, that's kind of my world, as well as like
Yeah.
even sources of capital. It's just like, all right, you don't have access to traditional programs in certain aspects. So how do you get around that with the cannabis companies? Like, have you seen any utility companies like not offer programs to the cannabis industry clients because it is federally
hmm
legal? How do you navigate that compliance arena?
Yeah. Good. That's an awesome question, Ray. And it doesn't really come up a whole lot, because the utilities, obviously come, operate, within a federal framework. They have rules they have to, comply with. But really, for the most part, they're able to offer these programs to any entity that pays into them. So if you look at your utility bill, There's probably going to be a line item in there, that says, energy efficiency or renewable energy kind of contribution. So if you're an electric or gas utility customer, you're paying into that program regardless of what you actually do with it.
Yep. Yep.
Assuming you're legally doing what you're supposed to be doing
Yeah.
in the
Yeah.
eyes of the state government, right? So utilities, they're for the most part pretty colorblind to what that customer is actually doing, with a couple of exceptions. So out west in Washington and Oregon, you've got some federally kind of managed hydropower facilities. The Bonneville Power Authority, I believe it's called.
Hmm.
And so if the power comes from one of those kind of federally managed dams, then the utilities who kind of are served by that power supply um,
Hmm.
aren't able, to give the money to cannabis operators. That's one of the exceptions. And then early on, also in the state of Maine, where we have a state, that's where I'm based, we have a statewide program called Efficiency Maine. It's run by, or there's a board, of directors, and it's was politically appointed board of directors. And when these programs was first getting started, that board was comprised of people who didn't like cannabis, who definitely kind of fell into the
Okay.
whole idea,
Right.
that it's, some sort of devil's lettuce, right? And so they were like, hey, no, we don't like the industry. So we're not going to, let, people who grow marijuana have access to it. But there was a change in administration and they let that go, thankfully. So yeah, since then, there have been, that are giving away a ton of money for cannabis projects. And this is kind of, we got one in through the program, a $650,000 incentive, which was, a beautiful one. As Donald Trump probably would say, it was a perfect, project. But it's not a success story exactly because the customer was like, yeah, we still can't afford to do this project, which blew my mind. Of course, frustrated me because the way we work also is on a success fee. So we'll get a small
Yeah.
deposit up front just to get to do the work, but we don't actually take our fee, which is a percentage of the customer's check that they're able to get.
Yep.
We take a small percentage of that. Once the utility has cut their check. But that project never happened because these guys ran out of money, and which is one of the things about the cannabis industry, which is, as you know, because you're in the, the by the finance space, because how, a lot of operations aren't rolling in a ton of money, right? So
Hmm.
even if it's virtually a project is that 50% less costly than it would be otherwise, it can still be a lot of money, for a lot of
Oh yeah.
operations.
Yeah.
So, that's kind of one of the things I get nervous about is if I'm not sure if a customer is, really able to, commit to the project, even if there's a 50% discount, from the utility. But
Yeah.
thankfully it
Because
doesn't
there is
happen as
that.
often as it could. Yeah.
Yeah, yeah, because there's just still that real cost of upfront capital that you need to
Yeah.
either be willing to build out the facility or already operating. And so it's just like, but if you are operating and you're kind of humming along, and even if, it does not everything's great, but you are an operating entity, then
Mm-hmm.
it does kind of make sense to take advantage of some of this stuff. But there's always that cost, and it's
Yeah.
not always in dollars. It's still time and energy to like refab or do things. And as you
Mm-hmm.
know, 'cause you have to, kind of do a lot of the front end stuff.
Yeah. Yeah.
Okay. No, and that is interesting. That's, most states have, the utility companies can kind of operate as they wish, and, unless they're so big that they're, connected to the federal government, in which case
Yeah.
they kind of say no, which that checks out and makes
Yeah,
sense.
just a couple out there. Yeah, and Washington State really kind of where that's really a problem, but that may
Okay.
change with descheduling or rescheduling. We'll see what happens there. That would be kind of one of the perks, of rescheduling perhaps, is that the Feds kind of
Yeah,
let up,
yeah, it's
on that.
rescheduling. It will be interesting to see how that impacts because I don't know, it doesn't just acknowledge medical benefits, and so it'd be kind of foolish for companies to like be anti-medical benefits. But we will give that time, and which is kind of a nice segue into our next question. Kind of your thoughts on the future. I just got back from MJ Unpacked in Missouri, which was awesome to learn more about the Missouri market and yeah, just like future, kind of where the industry is going. But
Yeah.
I think there's always a bit of doom and gloom in the industry. We all want to be going faster and get larger than it is, but I'm still pretty happy to be here. I think it's a pretty cool time to be a part of the industry, and
hmm
no better time than the present. But on that note, what are you excited about for the future, and just kind of any ideas for 2025?
Yeah, good question. Yeah, it's like you said, there's a lot of feelings,
Yeah.
when you're talking about the cannabis industry. And yeah, of course, every state is different, but yeah, I'm looking forward to a time in which the federal government, acknowledges the existence of this industry. And then at that point, then growers will be able to tap, money that USDA puts up, for agricultural projects. So, once cannabis industry is able to, to act and behave like a normal business, they can, yeah, presumably, get some of these money, buckets of money from the USDA, which would be fantastic. But even if that doesn't happen, and there'll still be, we're going to continue of maturing, within the industry. I think we'll see some of the folks who are, thinking more about kind of the long term viability, of their operations. Less short term thinking around like, all right, how do we get our money back in 6 months? But more like, all right, we're in this for the long run, and we're going to be operating our facility for 5, 6, 7, 10 years. And kind of once I think you see that shift towards a longer term thinking, then you're going to see people who are truly appreciate the benefit of investing in energy efficiency. Because there's always going to be some upfront costs, right? Like you said, I mean, the utilities will pay 50%, or more of the project. That still means 50% of the cost, is borne by the operator. But the payback for a large lighting project, if you compare it to high pressure sodium, it can be like a year or less, right? That means after that first year, you're making money, on the project. It's saving you more than it cost you. And so I think we'll see, greater appreciation, of that math. And that's kind of where I'm excited about, is that I don't think this is going to go anywhere away anytime soon. But I do expect that, as more companies use LEDs and energy efficient equipment in their facilities, that the utilities are going to be less inclined to throw money at them to install that equipment. So it's a fear that I have, and I can see the writing on the wall in some places. So I would just say, hey, if any of your listeners are thinking about installing new fixtures or retrofitting an HVAC facility or building out a new one for that matter, um, you know, certainly do everything you can to get in front of these programs because they may not be here forever,
No,
and
that
that's just
makes
kind of
sense.
a, yeah, something I would leave a note with folks about that. Just like, yeah, these things, they're not too good to be true. They're totally legitimate, but it requires some hoops to jump through. And it's easy to make mistakes. So you want to work with somebody who knows their way around these programs. And yeah, and just, and don't delay, right?
No, that makes sense. That makes
Yeah.
sense. Where it's like some of this stuff is just happening in real time, and there opportunities aren't going to be there forever for some of this stuff. And yeah,
hmm
I would second kind of I definitely agree with you. Is the time frames are becoming longer, which is more realistic, and it's just the
Yeah.
nature of the industry. It's like people were probably a little bit overzealous with some of their timelines, and
Yeah.
just business plans. And so definitely taking a more tempered, realistic approach with longer time horizons, more investment on the front end of the facility,
hmm
is definitely, where people are trending to. Like some markets are going to open up and there'll always be some of these like quickly created companies to try to be first to market, but there's always going to be a spot, I think, for like the second person who took a little bit more time, kind of knew about some other programs. And I guess that is where experience helps. And kind of you open up one facility and didn't take advantage of it, and you're trying to open up another facility or another business, you have a second chance to take advantage of some of this
hmm
stuff. So, no, thanks for your time, Sam, and letting us know about what you do. We always try to make some of this like ancillary professional services more interesting. At the end of the day, it's just like an energy tax credit, but it's still real money. And so that's kind of where I always I get excited about. I'm like, oh, money, let's manage it.
Right. And
So
zero cost money too at that, right? I mean, you don't have to, get, fit 20%, interest rate, to get this money coming into your business. It's like, It's basically it's a gift. It's a gift from the utility. So you just have to know what questions to ask. It's amazing.
That makes sense. It's not going to be around forever. Alrighty. Well, thank you so
Yeah.
much for your time, Sam. You have a good day.
Appreciate it, man. Good to see you.